Good evening. Back with you with today's recap, looking at the September 17th watch list, which was posted at 9:04 a.m., about 26 minutes before market open on September 17th. I think before we even jump into the watch list, it's important to take a look at the overall market conditions and kind of appreciate where we're at here. So let's bring up the Nasdaq. Just want to talk about something here. So on the right-hand side, you can see that the Nasdaq took a dive there just in February when we went through the world turmoil. And ever since then, it's just been this continuous uptrend, which has been why a lot of stocks have just been exploding. They've been breaking out, going to exceedingly high levels. And it wasn't until the first week of September we had the next little correction. Now, is this part of a massive dive? Is it going to come back? I don't know. But the thing to kind of take note of is that it doesn't matter if you look at the Nasdaq, if you look at the S&P, same sort of thing. The nosedive, the recovery, and then this is the next kind of segment that we're stuck in right now. Or even on the Dow Jones, same thing. Exact same pattern. So looking at the more intraday patterns, you can see right here, this is from, let's go back here. Let me put in, so September 1st. So there we can see the nice uptrending pattern on the intraday. And then it's like we took a giant nosedive. And about September 4th, we've been going through this massive up and down choppiness. Like this, the market has no trend. It's going up, it's giving back all its gains. Going back up, giving back all its gains. Going back up, giving back all of its gains. And even just looking at today, that trend continued. The market opened up here, the Nasdaq, at least this index here right here, opened up here the 260s and went back down to the 260s by midday again. And then went back up and kind of came back down all over the place. And when you have a market that's behaving choppy like this, it makes it extremely difficult to trade either long or short. You want to have a market trend. If the markets are going up, it's easy to buy a low, sell high. If the markets are crashing, it's easy to short, sell high, and buy back to cover low. But this right here, this should give you an idea as to why stocks are just behaving extremely strange. So I'm down $232 on the day. So the entire week, still up 700, but still, just want to go through some of the trades today and review some of the plays that I was in on. So I was in on NWBO overnight, and you can see that right here. So what was my thinking process? What was going on? So if you looked at yesterday's recap, you saw that these are one of my favorite patterns. I love when they close high, and then the idea is that you can sell into a spike tomorrow. Now, again, to no surprise, the markets are basically tanking and very choppy. So even though this thing opened up here in the 90s and I was expecting a continuation play for break in the ones, this is the environment we're in right now. So I overextended my welcome a little bit. And the moment this thing started taking out the 80s area, I was out. I got out at 88 cents. So got it at 91.32, out at 88 cents on 7,000 shares. So about a somewhat $200 position that I lost. Again, the markets were in an uptrend. Likely this thing would have spiked in the morning. So we're seeing a lot of failed spikers in the morning, which is an indication that we need to adapt. Okay, so taking a look at the next one right here, VXRT was the next kind of big play that was going on today. And I mean, this is a really beautiful move. So just kind of looking at the longer term chart here on VXRT, you can see that we've had these beautiful spikes. And we had the spike here, and then a few days later we had a spike here. And it wasn't really until September 14th when it finally took out this $7 high and went all the way to the 850s. So the key lesson here is that, sometimes these percent gainers that you catch the day of, so let's say you caught it on September 2nd, they're really not going to be worth trading until maybe, in this case, 12 days afterwards. That's where the real breakout actually occurred. And then same thing today. So you can see that we had a bit of a spike right here on September 16th between the market and the after hours, and then today this thing started to run. But it had to come from the 719s to break through the 850s. So I bought the breakout initially here and was out for a $40 loss when it was a little bit choppy. But when it proved that it can run, I got back in here in 855s. And you can look back at the Facebook postings where I was out $8.94 and $9 a share. For it was beautiful, almost $300-400 profit. I got to double check to see what the actual thing was. I was in on 1,000 shares. I was out 500 at $8.94 and the other 500 at $9. So you can do the math yourself and see exactly what that accumulates to. But it's about $350, I think. And then, it's no surprise after these spikes, this thing has now completely faded and almost given back the majority of the gains that that it gave the market. Again, it's an indication to the environment we're in. Typically, if this was an uptrending market, I would imagine this thing would be hanging out somewhere up near its highs and potentially look for a push through tomorrow. So, beautiful trade on VXRT. Important not to get caught on the downside, and a really good lesson on that. The next big mover today was CRDF. Worth talking about that. So CRDF, as you can see, I've drawn a bunch of lines here. Let me just get rid of those. So CRDF kind of was doing nothing. There was really no way to prepare for the stock unless you were going to dig into their news releases and their SEC filings and really be a fundamental trader. If you're a technical trader, you would have just caught this on your percent gainer scan. And it would have not likely happened until this thing started moving from the 6s to the 7s, where you would start seeing sort of meaningful percent movers. And, something like this, as attractive as it may look that it went from the 6s to the 11s, what's even more important to take note of is, it's easy to trade a chart that has what's the word, like a pattern that actually allows you to see what's going on. So let me just kind of show you what I'm talking about here. When you have an uptrending pattern, it's very easy to trade this on the pullbacks, right? Like every time this thing is going up here, anytime it kind of spikes and retraces towards the trend line, it's easy to trade that. Once again, it spikes, retraces to the trend line, you can buy when it gets to the trend line. The problem is that when this thing starts taking a massive change in its trend, it starts becoming more and more aggressive. And as exciting as that may seem, it actually starts becoming scarier in the context of how you can trade this chart. Okay, so I think what's infinitely important is that the moment you have this change, this giant candle, which now is tracing away from the highs, the trend of the highs as well, like this thing, if we were to draw an average trend line right there, now you're starting to get into this area where the volatility is starting to come in. So how do you trade this chart? Well, really, you have to trade it with very tight risks. And if you're going to get in, let's say when it retraces towards the trend line, let's say here in the 7s, the moment this thing kind of punches through the trend line, which it never did, but if it came down underneath here and took out the trend line for the first time, it's time to get out. So this means that you could stay and wait for this for the few hours that it was ramping up. But the first time, so I'll redraw this right here, but the first time it takes out that trend line is the time to get out. Okay? So this is kind of the approach that I would have with a trade like this. I completely missed this trade. I was a little bit busy with the clients today, but had I seen this, I mean, this would have been a fantastic trade, something you could buy in the 6s and hold so long as it's following the trend line. And the moment it cracks the trend line, I'd be cutting my profits. And still, 6 to 10. I mean, if you got in here with 1,000 shares in the 6s, you could sell a few hours later at $10,000. So you make $4,000 in this trade in a few hours. So really beautiful trade. And you can see after it kind of made its highs, it's now pulled back quite a bit, and decent recovery. So this is kind of something that you can play on the long side. And if there's shares available to short, you can short it on the downside as well. Okay, so we'll be watching this for the continuation play and see if it can come and retest the 18s and punch through that. And if it can do that, then there's another play there as well. Okay. So let's see, the next one I wanted to talk about was BTU, just an example of a failed breakout and appreciating the market environment we're in. So, BTU right here had a wonderful breakout in the afternoon. So you had the spike, the pullback, and then the retesting of the highs, and it actually punched through. But again, the market environment, this was around 2 p.m., right? And if you look at essentially all the indices in the afternoon started tanking. So to no surprise, this was a failed breakout, and you know, it didn't really work out, even though this was a perfect pattern. Now going back a few days, I want to show you JCPenney, where the exact same pattern actually ended up working. Let's go back here and take a look, and I'll show you exactly what I mean. See the exact same pattern right here, the A, B, C, and then the D. When it finally punched through, it actually worked. And I'm willing to bet that if I go back and take a look at the indice charts like Nasdaq and whatnot, even though it's an OTC, but overall market conditions September 9th was probably on an upswing of this choppiness, for lack of better terms, okay? So these patterns do work. It's just we have to respect the market environment that we're in. It's kind of hard. You can't short, you can't go long. So there is very well a point that you could take away from this, that maybe it's just a good time to take off right now. Just watch the markets, maybe go back to paper trading, and see if you can find some strategies that work for you. Maybe you buy off the support and sell into the resistance, or do what a lot of the seasoned traders do and just take the time off right now. Just watch and appreciate that we've had such a nice run up, and let the market kind of find what it's doing. If it's going to start pulling back, you know, then it's a good setup to start shorting these, right? Like if this is going to be a massive crash, well, start shorting the market. If it's going to start uptrending again, well, then maybe this is just a little dip that we had right here. And we'll start getting another uptrend, and it'll be nice to go back to trading stocks again. Okay, a quick review of the watch list as well. Let's just go through that, the one that was posted this morning at 9:04. So we'll go through PIX and take a look at that and see what happened to PIX. You know, PIX kind of reminds me of the stock that, had it not been for the market environment that we're in, this thing would have probably ran by now. I mean, look how many times this thing is testing the tops. Once, twice, 3, 4, 5, 6 times it's tried to punch through the 628, 629 price point. So it looks like it wants it. So this is absolutely a watch. It's a multi-year breakout if it does go. So I'm very excited to watch this, and I think if this thing can punch through with convincing volume, like I talked about in the September 16th watch list, this thing can run, because you don't really have any meaningful resistance that's close by, at least, that could keep this down. So close watch for September 18th, especially a Friday. We could get short squeezes in the afternoon. Okay, the next one was AXTI. So AXTI, I think, is you know, this stock is a slower moving stock. There really is no catalyst that's moving this right now, so it's still hanging out here in the 6s, high 5s. But again, once this punches through the 6s, I've got an alert set up right here, so it'll tell me when it's time to pay attention to it. So I'll be watching this for a break of the 620s. CKPT, we'll take a look at that. So, you know, we have this kind of triple top and some pre-market action above the highs, but it looked like it was more interested in fading today. So, you know, this is reversing off of potentially a key resistance level here in the 3s. So there might be a bit of a pattern 5 purchase right here for a nice spike. But volume needs to come in, and the stock has kind of shown that it had the nice spike, but the volume just been kind of fading here consistently over the last week or so. So likely no play anymore, and just more so to watch. And if it can retest the 450s, then that's great. But other than that, it's I'm not going to be looking at it anymore. TCON. So let's see what TCON did today. I was too busy with all these other plays. So TCON looks like it's ready, right? You see this right here? Like it's tried the tops a few times, and even after hours here, it's hanging out near the tops. So sometimes these stocks need to consolidate near these highs before they run. So a break of the 5s, you know, 550s, 560s, 570s in this area right here could be a really nice breakout for, especially on a Friday afternoon where the shorts tend to get squeezed out. AAU, bit of a slower play. Wasn't really much going on with that today. It had a little bit of pre-market action in the shape of a breakout, but again, more consolidation, which is healthy. If this thing can spike here and consolidate, then, you know, this could run again. So be watching for that. Again, respecting the market environment that we're currently in right now. Let's see here, PRTY. So looking like it's also ready to go, kind of consolidating near its highs. We would be getting a multi-month breakout here in the threes if we can go here. So it's looking like it's ready to go. We just need a good catalyst, maybe a press release, maybe a good SEC filing, maybe market hype, whatever it's going to be. We need this thing to start punching through 310 with convincing volume. So we'll see what it's doing tomorrow, September 18th. BIOC is the next one right here. Take a look at this one as well. It's kind of nearing the highs. Let's see how it behaved today. Well, same thing. You know, it's just the market environment we're in, guys and girls and anyone in between. You know, this is what it is. We got to see what's going on. We even have some resistance to deal with BIOC as well. So, you know, it is what it is. So this is probably not a trade for me, more so just to watch, but something to pay attention to for a continued ABCD pattern. Let's see here, SRNE and IBIO. Let's see here, SRNE, bit of a higher price stock, was acting in the pre-markets today, and you know, it did this kind of this gap strategy, and it gave back all of its gains. But what's nice about it is it's holding off of the after-hour highs on September 16 here. So, you know, this could very well be a morning spike on September 18th. So this will be something I'll be watching, especially because it's hanging out near a key area right here. Previous resistance has become support. So if it runs, then you got a nice comfortable floor to play off of as your risk. So, but for sure I'll be watching this for September 18th. RIGL was the other one I was trading today. It was a bit of a failed play. You know, I was buying it here in the what was it? Was it in the 270s? I think. Yeah. I gotta go back and double check, but I was buying this off the reversal right here, and it just wasn't performing. Again, market conditions. Nice spike in the pre-market, but as soon as market opened up, there was no play. So with all that previous resistance, I need to see this back in the threes before I'm excited about it. So likely it's just going to be a fade, and unless I catch on a pre-market scanner again later on. You know, I really thought this thing getting up to the 290s would have had a continuation in the threes, but looks like it had other plans. So, and the last one is IBIO. So let's talk about that. So IBIO looks like it actually was able to punch through that resistance that I was interested in, but to no surprise, market environment's also not supporting it. It faded and failed. So maybe this needs to consolidate a little bit more here before it runs again. But nonetheless, it's a decent watch. Again, I'm not too excited about the resistance that we have to break through to get through all these price points. There are way better setups that I'm interested in, especially when I see these high volume plays right here in the past. So likely just a watch, but you know, with the right price action, I'll consider it maybe for like a 15, 20, or 30 cent move. So that's it. Just to consolidate your thoughts, everyone. You know, this is the market environment we're in right now. It's not very decisive. You can see it's just all over the place, like a bouncing ball up and down, no matter what I'm looking at. The Nasdaq, the S&P, again the bouncing ball, and Dow Jones. So learn to be adaptable. This is the sort of time that you can take some vacation, come back and look at the markets in a few weeks and see what it's doing, because you're not really missing much right now. Okay, so we'll be back tomorrow and try to get that watch list out before 9:15 a.m. on September 18th. And have a good evening, everybody.